Hello, Mr. Arun. I am with Yan, and I'm happy to have you. Allow me to ask you, please, Mr. Arun. First of all, I want to ask you about gold. Do you think this pullback that is around, if you heard me, it is around 5,000 now? Do you think this is just profit taking or something else that might be go up again?
Good afternoon, Ms. Vidian. Thank you for having me on the show. Uh, first of all, talking about the gold, this correction has been pretty sharp in the last one day. The markets have given a very sharp pullback. Now, there are two major reasons for this. One is fundamental and one is technical. The fundamental reason is Trump has proposed Kevin Warsh, who was previously an inflation hawk, to be the next FOMC chair instead of Jerome Powell. Now, that has triggered a sell-off in precious metals, gold, silver, and other some risk-on assets as well. So, if you look into this announcement, yes, Mr. Kevin Warsh was previously considered to be an inflation hawk, but he has changed his views recently. Now, he is in favor of cutting the interest rates. So, ideally, in the medium term, it should be bullish for gold itself. Now, the second factor is technical. Gold has had a very strong, relentless rally over the past few months. In October 2025, gold was trading at about $3,940 an ounce, and then from there it rallied to $5,600 an ounce without any major correction. In the last 1 year, gold has virtually doubled. Same with silver also. So, in the charts, we would say that gold was severely overextended. It was an overbought territory. So, gold's current correction is much needed. It's like a healthy correction. That's what I would say. From Century Financial's perspective and our research would like to say that the current dip is healthy, and once it stabilizes, we believe the macro narratives for gold are still in place. The current the proposed FOMC new chairperson.
Mr. Aaron, do you
Yes.
mean that when prices stabilize, do you think we can see another rally on gold? Because some people think that it's trying to decouple, everyone's trying to hedge the dollar.
I don't think so. First of all, Trump has openly advocated for a weaker dollar. So, second, Trump's proposed FOMC chair Kevin Warsh, even though he is an inflation hawk, as I mentioned earlier, the person has changed his opinions recently in favor of more aggressive interest rate cuts to align with Trump's policy. So the current dollar rally might not be sustained in the long term. So the dollar's rally could be short-lived. Dollar could again correct. And second thing, more importantly, is that a major driver of gold price during the past few years has not been the dollar's price. It has been central bank purchases of gold. Central bank purchases of gold over the in 2010 to 2020 was averaging about 500 tons per annum. But after the Russia-Ukraine war, it suddenly jumped to 1,000 tons per annum. So central bank purchases are a key driver of current gold price rally, and we don't see that driver of prices going away. So fundamentally, the price drivers are intact. Technically, on the charts, the gold price was overextended, and it's a much needed correction. Once the conditions stabilize, we would like to believe that gold can resume its bull run.
Okay, you say central banks are the main driver, and What about silver that is under 100? How do you expect it to move?
Silver again doesn't have the same drivers of gold, but silver uh, is considered as an inflation hedge as well as a industrial metal. So generally, silver has a higher beta when compared to gold. Now, the silver market is in a deficit right now. The supply has been less than demand for the past few years. Obviously, as we can see, the silver price has rallied by more than 300% in the last 1 year. So, again, silver also was very much overextended and overbought in the market. But the fundamental drivers still don't change. What we can see in the market is that the demand is higher than the supply from the industrial sectors like solar panels, renewable energy, or even in the data center related sectors. So, silver has genuine demand, and silver supply from new mines is not expected to increase drastically over the next few years. With no new supply coming to the market and with demand strong, we would expect the silver price also to bounce back after the current correction.
Thank you very much, Mr. Arun.
Thank you very much.